Hello traders, Gary Wagner here. Approximately 10 a.m. in Honolulu, 4 o'clock in New York City. It is Thursday, the 20th day of September, 2012, and this is the daily report for gold and silver. Mixed bag in the precious metals markets, with gold trading nominally lower, unchanged to $1, $2 lower. As you can see, current print 1768. That is the cash print. We had December COMEX gold most active at 1770.60. Low today 1754.60 and a high of 1771.80. Silver, although, is trading quietly higher to basically unchanged, so they're both in that same area. Our current print, as you can see, 34.60 and 34.72 is the current ask, 62 is the bid, putting it up about 5 cents on the day, with a low of 33.99 and a high of 34.82. As we move in towards the end of the week, wanted to start off with looking at really two charts this morning. A weekly gold chart, really to give us that big picture, and then a half a day or 720 minute, both in Henkin Ashi format. First, to the big picture. By looking at this weekly chart, and especially in Henkin format, here's what is apparently very, very clear to me. Ever since we really issued the buy signal and we hit that breakout, and you can see the break that we were looking at was as it traded above 1636. What I want you to do really is take a look at the bodies, the actual real bodies just prior to the move to the upside. In other words, the breakout above that 1636. First of all, we were in a very tight compression area in which we had alternating candle color. As it went green, though, you can see we still maintained that really, really small body size. Now, the first candle that actually breaks above it, you can see right in here, at first it loses that tail on the bottom. That's important, but still relatively a small candle. But what you can really see is as the market broke above the compression triangle, things were going to change. And they were going to change rather quick. Each of these weeks for the last month, 1, 2, 3, 4 in here, no lower tails, very, very strong or nice body size, market moving to new record, not record highs, but new 6.5 month highs yesterday as we went above 1780. And when we look at the charts itself and we look at historical references, what you can see is that whenever we had these protracted or extended rallies in the marketplace, and of course this one being that parabolic rise to our record top, the one characteristic really of the market is that once it broke free from trading kind of sideways or really trading within a defined range, that body size grew, had an absence of tail. Body size grew, had an absence of tail. Here, you're almost basically going parabolic, so it's a little bit different. The body size grows, but as we get to the top, you can see even though it's moving to new high, new high, new high, that tail begins to emerge. What does that tell us? Well, that tells us that as long as we continue to see the marketplace trade in a manner, on a technical basis, of course, where we've got good body size, no lower tail in the marketplace, it's really indicative of a market that will continue higher. Now, why do I bring that up? The reason that I'm bringing it up at this point is because when we take a look at the shorter term works, there should be some concern that the market, in fact, is getting a little bit overbought. You can see that the MACD looks as though it's going to cross. If it looks as though it actually might have at this point on the 720. But at the same time, we talked about throughout the week that this support area right in here, 1750 to 1757, you see where these lows are. I talked about the fact that this really needs to hold. These were prior support levels right in here. You can see as the market goes up, it trades sideways a little bit, but the lows do not break below that point. In the same way, What I looked at recently was the fact that as long as we had lows, it really didn't breach into this area by too much. I believe what we're witnessing is move up, consolidation sideways, followed by a move up, then sideways, and so forth. And that really is my belief. My belief is that this market is going to continue higher. The fundamentals that are in play are simply too strong to warrant otherwise. On days like today, where we have a little downside pressure, we've got a really strong US dollar today. And we have factors in the market that would typically really have pushed the gold market to much lower prices. In fact, what we're seeing is the gold market under pressure, the gold market trading lower to unchanged, but in no way are we seeing any kind of real structure that's showing us some sort of a correction is inevitable, like we get in here, where we start to get these red bodies, and the red bodies actually grow in size. You notice that even on the short term, and short term to me is 720. I do look at 60 minutes, but these are all short-term studies. Even on these short-term studies, you notice the body size is rather small. The market is, I believe, absolutely consolidating. We are looking at a cash market chart of silver, daily chart, straight candlestick format. If time permits, we'll go ahead and turn it into a Henkin before the close of the show. But here's what I'm noticing with our silver market currently. There can be no doubt we do have some interim resistance at $35 per ounce. The high today is just shy of that. We have tested it on a few days and a few occasions. However, we've been unable to take that out. My sense is that the market will probably move sideways, and barring no real fundamental change after the sideways move, I would look for it to take out 35 and head to the next level. The next major level of resistance, of course, is going to be just above 37. And on a technical basis, it's based upon these tops that you see in the market that we saw on a prior move to the upside. Now, when we convert this daily chart into our Henkin chart, one thing can be very, very apparent, and that is that the momentum or strength of this uptrend has absolutely dynamically changed. You can see, for example, right in here, you have that large body size, but that's followed by, rather than a correction, as we've talked about, a sideways move in the market. Now, straight green all the way up, depending on how it closes, this appears as though this is going to be one of our first dojis. And the doji is absolutely, in both Henkin and straight candlestick, an absolute pivot point, potential pivot point, I should say, or sign of consolidation. Is it possible that we'll see a correction within this area? To be honest with you, technically, it's very, very possible. Fundamentally, though, we have not seen any recourse or reason to really see this market dynamically change. However, we have all learned in the past that whatever the fundamentals are in the market, given a need or an excuse to pull profits and take the market lower, almost anything can be cited. So my sense is we have stops in place. We have tremendous profit on these positions, but we do want to watch it carefully and watch for any signs that we are going to go into a corrective wave. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Friday tomorrow for the weekly wrap-up. Bye-bye.